But I do think by year end, it's very possible we could see 12 to 13, or at least double bottom at 15.7. Bitcoin is going through this crazy period where people are just gambling on these coins.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
For me, the market has already anticipated that. To me, the biggest comment that he made was that they will wait until inflation comes significantly lower before even thinking about lowering rates. So I think the market, this is where the mispriced market is for me, and why I remain bearish on the equity markets, is that the market has this understanding that as soon as he pauses, that's one step away from cutting rates. And I don't think that's the case. And again, Jerome Powell has said this till he's blue in the face, that he doesn't want to repeat the mistakes of Paul Volcker in the 80s, right? So to me, rates are not going down unless, like he said, unless we get inflation back in the bag. That's 2%. And I don't see that happening for at least a year or two.
What would that mean for the economy? Is that back to that stagflation forecast that you have, even though he did say he wants to continue to push on the inflation?
Yeah, so it is back to the stagflation narrative, and I think that's the most likely near-term outlook over the next 6 to 12 months. We have a Fed that, again, likely won't be cutting rates to stimulate growth. They've already said that there'll be a mild recession. Again, just like you mentioned, with him saying transitory, look at what we got. So I have very little confidence in the Fed that they actually know what the economy is going to ultimately do. And it puts us into a situation where inflation stays elevated. And I think people have to understand that you had two parts to inflation. We had the supply chain part, which has been solved. We're not really in that issue anymore, but we still have the higher wages. Wages jumped tremendously since COVID. And that's going to be an inflationary pressure that's going to keep inflation above, in my opinion, just above 3% for at least a year.
Of course, the tightening of the credit took its toll on the banking sector, as we saw with a number of banks. We had 3 of the largest U.S. bank failures happening in March alone. And yet you are now saying you're long on the regional banks?
Yes, that's correct. So the way I trade, and again, I'm a shorter term trader, but the way I look at it is you have things that have been beaten down to probably levels where it's a little overbeaten. And so if we just get some sort of relief rally, which is very likely in the banking sector, if things calm down a little bit, I think money flow heads back into them. And likewise, I'm actually short big cap tech. We've seen stocks like NVIDIA, AMD, Tesla start to rip higher again, Microsoft. All these stocks are starting to behave like they were in 2021. And for me, that's a red flag. Just like when I see Pepe in the crypto markets and all these meme coins running crazy, to me, that's not investing, that's gambling. And gambling was a precursor to 1999, 2000 collapse, 2007, except maybe that was in the housing market, but it was still gambling with flipping. People, like regular people, were flipping homes, and they thought that was the easiest money to be made. What happened? We had the collapse and the financial crisis. And so in 2021, we saw that again, and it led to the 2022 declines, and now we're starting to see it again. And so for me, these are flashing warning signs where I start taking advantage on the short side of some of these mega cap tech plays that have gone up way too much, looking for some sort of retrace.
Shorting the mega cap tech plays, but along the regional banks, which is a contrarian position. A little hard without your charts right now, but can you break down the level that you got into the KRE index and at what level you would pull out and what would signal that to you?
Yeah, so I got it a little earlier. I'm down on the position right now, but ultimately I do expect a significant bounce over the next couple of weeks. So it's really probably something where I'm not going to hold it into a recession. So as we get later in the year and I expect a recession, I won't be looking to keep that position because I do think it'll create more stress on the system with loans going bad. We know about commercial loans and all the craziness that we have there. But one of the confidence builders I have is that the Fed has the government has very clearly shown that they will make depositors whole. And I think that's a confidence builder where people start to say, okay, I don't have to pull my money out of all these banks because even if it does go under, my deposits are safe. And so that gives me confidence to kind of move into those positions while also taking a contrarian view on a recession, which should attack the big cap tech plays.
What's your confidence level on a resolution there?
So my confidence still remains better than 50% that they do come to a resolution, but every cycle we go through this, there's more kind of issues in the government. We have more people that are on the fringe sides of things that are more likely to push us towards default. So I think as a trader, as an investor, it's definitely something where when I see the VIX is trading at ridiculous levels. No one's fearful. I start to nibble on a little bit on the VIX side to look for some upside in fear. What if we do hit that? It's almost like buying an option where if we did happen to have that, the VIX could soar and you could make a lot of money, versus if it doesn't happen, it's already factored in. The VIX has very little downside to go. So there are ways to play this, but I would just say going with the debt ceiling issue, I do expect some resolution because I don't think any party wants to be blamed, but it is getting scarier. Every time we go through this and we have these fringe sides to each party, it gets scarier that they may just say, no, let's screw it. Let's just let this thing default.
So if a resolution is reached, that would mean more money printing,
right?
Which would also be a positive for Bitcoin. How are you reading that on the macro side? And I know you have your technical analysis side as well.
So I think a default would be a positive, at least a near-term positive for Bitcoin, right? It would be just like when the banks began to fail and we saw Bitcoin really rocket to the upside. My issue with Bitcoin is that even when we had issues with some of the regionals where they were dropping 50% like 2 weeks ago, Bitcoin actually came down. And to me, that tells me Bitcoin doesn't know what it is yet. Is it a digital gold? Is it a risk asset? And so I'm in the camp that I think Bitcoin topped out at 30,500 recently, and I actually think we are going to head lower. I'm still in the camp that we're probably not making, we haven't made the bottom in Bitcoin yet.
You've previously said that you do see Bitcoin dropping to 12 or 13,000, and if it drops through that support line, then it could go as low as 9,000 in 2023.
Yeah, so 2023, maybe into 2024, the 9,000 one. But I do think by year end, it's very possible we could see 12 to 13, or at least double bottom at 15.7.
What would take Bitcoin then?
That's going to be risk. It's going to be risk adjustment, meaning that de-risking in the system. Bitcoin is going through this crazy period where people are just gambling on these coins. And I've said this before, but I've never seen
other coins.
Yeah, on the other coins, but it's all the psychology of it, right? It's when people feel like they can gamble and they can just sell it to someone else higher and they know deep down there's no utility. That is not a sign of a bottom in a market, like a Bitcoin bull market. It's the sign of a top. And so now if you expand that out and say, okay, Bitcoin is still a risk asset, well, what if the stock market does start to tumble? Where does Bitcoin go? And that's my thesis, is that we will hit a recession. The market doesn't think that the Fed won't come to the rescue. The market and investors are conditioned for now 10, 15 years. Every time there's a hiccup, the Fed prints money. I don't think they do it this time. And that is going to be a shock. It's going to revalue the stock market 20, 30% lower from here, and that will take Bitcoin back down.
In the sense of it's a fully unstable environment, it's dragging down everything.
The parents have said, you get out of the house, you're on your own now, to Bitcoin. Well, that's the Fed saying that to Bitcoin, right? I mean, it now has to stand on its own. There's no more money printing, at least for now.
The Fed never really helps Bitcoin, that's for sure, not directly, but the Fed has stepped to help the market.
Right, and it's the printing of money that ultimately helps Bitcoin.
So you really think Powell is going to hold steady, continue to channel his inner Paul Volcker? Okay.
I think...
What's the port line? I'm sorry.
No, I was just going to say, I think that the Fed intends, like in their mind, they're like, we have to be hard about this. We can't let it get away from us. And I think they'll try to hold out. But just like always, eventually the Fed will print. But we're talking about them holding out to such a level where the market doesn't expect this. Because again, look at 2018. We had the Fed begin to raise rates. The market dropped 20% in like 6 weeks. And the Fed started instantly to reverse.
And that's what the markets have come to.
That's what they expect.
The tantrums have yielded results.
But that was when inflation was under 2%. So now this is the key, and the market doesn't realize that yet.